Hi, YouTubers and our Strive family members. Today, I'm going to be discussing how to increase your NOI, which is your net operating income. Why is that important? Very simple, because you want to increase your cash flow. Okay, before I get started, let me introduce myself. My name is Detra Harris, and I am the Managing Director for Strive Wealth Builders. We are a business club for real estate investors. So please visit our website at Strive Wealth Builders. If you haven't joined us, please do so today. If you are not a subscriber to our YouTube channel, please click the subscribe button today. We'd love to have you. Okay, let's get started. Now, why is this so very important? Well, a couple of reasons. Number one, if you have a loan, which a lot of us we do apply for loans for our properties, then the lender is going to look at your NOI, your net operating income. Why? Is because they want to make sure that after you bring in your income for your rental, your what we call rental income, then we want to make sure that you can meet your expenses and also be able to meet your mortgage payment. So that's why it's really important, but it's really important for us investors because we want to increase our cash flow. We want to make as much cash as we can if you are that type of investor. Now there's a few types of investors, but what's very standard is an investor that wants cash flow and appreciation. Some investors only look for appreciation, not so much cash flow. For us at Strive Real Estate, we look for cash flow when we close the deal. Let's get started. I have a couple of examples here that I'm going to use for this illustration. Let's say that we just purchased 4 units, 4 unit apartment building, and each unit is collecting $1,000 per unit every month. So that's going to be $4,000 in rental income. Now, this property is not located in California. So this is an out-of-state property. We're collecting $1,000 a month for rental income for a two-bedroom, one bath apartment. Okay, so let's go with rental income again, $4,000. That's $1,000 per unit per month. Okay, so that's your rental income. Now, I included a bonus here because if you looked at some of my videos, you notice that I talk a lot about adding value to your property, and one of the ways you can do that to increase your income is by laundry income. So let's say that this property has laundry machines and we're collecting $200 in laundry income. So we're going to add that together, and now we're getting $4,200 per month in rental income, including laundry income. Now, what's very important is the expenses on the property. Now that you're collecting your $4,200 a month in rental income, you have to pay the bills on the property, and that's very important, right? So let's look at what those bills will look like. So, what's your expenses on the property? So I've included some standard expenses. Now, it may vary depending on the property type, but the standard expenses would be utilities, insurance, taxes, R&M, which is repairs and maintenance. Then we have landscaping. We also have legal and accounting, and we have a reserve. Now, I did not include property management in here because we are self-managing this property. So I did not include any property management fees in here if you're using a property management company. So if we were to add this up, so let's say our utilities per month for this fourplex is $500. Our insurance is $200. Our taxes every month $250. R&M is $400. Then we have landscaping at $200 per month. Legal and accounting is $200, and then we have a reserve at $100. Now, before I move on, I want to talk a little bit about legal and accounting and reserve. A lot of times we miss those numbers when we are performing our due diligence and then we prepare our rental analysis. It's important to put those numbers in there. So you want to make sure you set aside money for your accounting. I'm sure that you will need perhaps a CPA or a tax preparer to help you with your finances at the end of the year and prepare your tax returns. And then also, you want to set aside some legal reserve as well. Now, God forbid that you'll ever have to go through an eviction, but if you're in the business long enough, you will experience an eviction. Or you may have to just send one of your tenants a legal notice and hire an attorney for that. So make sure you set aside that. Reserves are really important for also emergency money. If you have also putting aside money for CapEx expenses as well, it really helps to offset that when you have a repair or replacement that needs to happen, like a busted water heater, or if you need roof repairs or something kind of similar to that. So that's really helpful. So let's add all of this up. So we're going to add up all of our expenses, which comes to $1,850 per month. So that's what our expenses will be for this property every month is 1,850. Now, what we want to do to determine our NOI is we want to subtract our expenses from our rental income, or shall I say, our property income in full. So that's 4,200 subtracted by 1,850. That's going to leave us with an NOI of 2,350. Looking pretty good on this property. All right. So at least we know by looking at these numbers that we can meet our expenses and we're going to have some money left over. So that's always great, right? That's our cash flow. So now we do have a mortgage on this property. So we always have to include that. After we determine our NOI, we want to put in our debt service. And that's what we call that. Our debt service is our mortgage payment. And our mortgage payment is $1,995 per month. So now we're going to subtract our mortgage payment from our NOI, and that leaves us with a cash flow of $355. Not bad, not bad on this for a fourplex. So that's our cash flow. Now, we want to increase this cash flow. Why wouldn't you? You want to make more money on this, right? But be careful in doing that. We don't want to shortcut ourselves and our expenses, and we always want to make sure our properties are well maintained. Don't be that slumlord, please. So make sure you're not cutting yourself short in your expenses. But there may be some wiggle room here where we can increase that cash flow, and that's what we want to do. And that's how we're going to. I'm going to show you a few tips on how you can increase cash flow. Okay, so let's look at utilities. Utilities is usually one of the factors that we look at first when we want to decrease our expenses. We want to look at the history of our utility bills, the water bill, the electricity, and see if we can cut back on some of those items. I was able to take $100 out of this budget by just reducing our utility bills. And how do we do that? We can install what we call efficiency items into our units. It may be replacing the toilets. It may be sending notices to your tenants asking them to reduce their water usage. Also, maybe some water usage and landscaping. Also, we can put in efficiency items such as light bulbs. That's efficiency items. Also, fans. So there's a lot of ways you can do that. You can contact your utility company and they will definitely give you tips on how to reduce your expenses in terms of water and electricity. So I was able to get that down to $400. So that's saving $100 there. Now, the next item I want to look at is going to be your repairs and maintenance. Now, let's look at your trends over the last 2 years and what does that look like with your repair and maintenance. So, what we've done with our tenants is that we send them tools and on how to reset their garbage disposals, how to troubleshoot certain items in the property, how to reset their um, electrical panels and things like that that they can do themselves, that we don't have to send out a vendor or a maintenance tech to handle that, which is an extra cost. And we've saved money there. So that I was able to cut $100 off of this budget. And now I'm down to $300 just by a phone call from a tenant calling us to say, hey, my garbage disposal is not working. Well, let me walk you through how to reset your garbage disposal. And maybe sometimes that will happen. That helps to do that. Or their thermostat needs, they need a battery in their smoke detector. really small items that they perhaps can do themselves without sending out a vendor will definitely save you some money. So we're going to reduce that by $100. So those two items I say you always have to look at. And also you may want to look at your landscaping. Is there a way that you can upgrade your landscaping? And while doing that, you may be able to cut down some of those costs by putting in drought resistant items. That may help. So I've reduced that by $50. So now I've reduced this budget by $250, which is not bad for a good start. So now you can always look at that. So one of the tips I want to give you as an investor when we are looking for deals, we look at value add properties and we look at what the expenses are on that property and how we can reduce those expenses to increase our NOI. And so if we look at that, so if I add this all up together, that's $1,600 and I've saved $250. So I'm going to add that 250 to 355 and I have a whopping $605 now that I'm bringing in cash flow. What more can I say? That's how you increase your NOI. Very simple. So I hope this video was helpful for you and please visit us again. I'd love to have you join us. Have a great day. See you next time.